In an increasingly digital world, the promise of a technological revolution in business transactions seems to be the answer to many inefficiencies of older systems. The futuristic city we observe, filled with interactive digital screens, is a reflection of what's to come, a system where transactions happen in real time, quickly, and without flaws. The vision is attractive. We imagine a future where there are no barriers, and purchases, negotiations, and exchanges happen instantly. But what if, in the middle of this promise of innovation, the system fails? What if, instead of advancing, we take a step back? The frustration of a stalled transaction in a digitalized world is more than a simple error. It's a breakdown of trust. The solution to these challenges is already in development, and it's called smart contracts. Ethereum, one of the most innovative blockchain platforms, presents a way to solve such problems. Its proposal is not only to decentralize finance but also to make contracts more efficient, secure, and most importantly, immutable. But what exactly are smart contracts? How do they work, and why are they essential for the future of business? This is the starting point to understand what is behind this digital revolution. The answer begins with the idea that contracts can be made without the need for intermediaries, without flaws, and with full transparency. However, this transformation is not instantaneous. The concept of smart contracts, while revolutionary, is still unknown to many. At the same time, the resistance of traditional business systems, with their complex structures and intermediaries, still represents a challenge. So how can a technology based on code replace this system? And what happens when this technology begins to be applied on a large scale? The future of business may be more agile and secure, but there are many obstacles to overcome. In the next topic, we will explore how Ethereum and smart contracts are changing the way the world negotiates. For centuries, the business world has relied on an intermediary trust structure: lawyers, brokers, banks, and other authorities. These intermediaries were seen as a necessity to ensure that transactions happened fairly, securely, and transparently. However, in many cases that trust was broken. Bureaucracy, high costs, and communication failures often resulted in setbacks and losses. Who has never felt frustrated with a contract that was not fulfilled as expected, or a transaction that took months to be completed due to the inefficiency of a system? Moreover, the cost of hiring these intermediaries can be exorbitant. Lawyers, consultants, and even banking fees that come with a simple financial transaction are just some of the expenses that the traditional market imposes on those involved. This system is not only inefficient, but it also makes negotiations more expensive, often distancing small businesses and individuals who don't have the necessary resources to fully participate in the market. And as if that weren't enough, the possibility of fraud and human error has always been present, further eroding trust in traditional institutions. With the evolution of Ethereum and its smart contracts, the paradigm of dependency on intermediaries can be broken. Instead of relying on a person or institution to ensure that a contract is fulfilled, an autonomous code can ensure that all parties involved comply with what was agreed upon, without the need for intermediaries who may fail or act dishonestly. This shift not only challenges traditional structures, but also creates a much stronger trust, built on the transparency of the code and the immutability of the blockchain. Ethereum is not just another cryptocurrency or digital platform. It is the backbone of a revolution that promises to transform not only the way we handle money, but also how we do business on a fundamental level. While Bitcoin emerged as a decentralized alternative to traditional money, Ethereum went further, creating a platform capable of executing smart contracts that are self-sustaining and do not rely on third parties for execution. By decentralizing the verification and execution process, Ethereum breaks the chains of centralized institutions, offering a new paradigm of trust, where anyone can verify and audit transactions without the need for an intermediary. The true strength of Ethereum lies in its blockchain, a public and immutable system that securely stores all transactions and contracts. In this new system, transactions do not depend on a single entity to be confirmed. They are verified by thousands of nodes distributed around the world, ensuring security and transparency. Decentralization removes single points of failure and creates a robust network resistant to fraud. Moreover, the transparency that Ethereum provides allows anyone, anywhere, to verify if a contract was fulfilled or if a transaction was carried out correctly, creating a level of trust never before seen in centralized systems. Ethereum is more than a smart contract platform. It is the engine driving the future of business, enabling the creation of decentralized applications, DApps, that allow for an infinite range of interactions between users without the need for intermediaries. This means that the same trust that was once placed in banks, governance, or companies can now be found in a transparent and immutable system, encoded and protected by Ethereum's blockchain. Ethereum not only challenges the status quo, but also creates a new infrastructure for business and interactions in the 21st century. Smart contracts represent the convergence of technology and law, where the execution of an agreement no longer depends on trust in an external party, but rather on the code that governs the contract. Simply put, a smart contract is a computer program that executes, verifies, or enforces the agreement established between two or more parties without the need for intermediaries. Instead of a traditional contract that requires the intervention of lawyers, banks, or other entities, a smart contract on Ethereum is automated, transparent, and incorruptible, as it is anchored in the blockchain. The main advantage of smart contracts is the elimination of risks associated with human error and corruption. Since the code is executed automatically and transparently, all agreed conditions are fulfilled without any external manipulation. For example, in a buy-sell transaction, the smart contract can ensure that payment is made only when the product is delivered, and vice versa, without the need for a bank or payment platform. Ethereum, with its immutable blockchain, ensures that the terms of the contract are fulfilled exactly as programmed, making the system fraud and dispute-proof. The beauty of smart contracts is that they are programmable and customizable to suit a wide range of scenarios and industries. Whether in financial transactions, property management, service delivery, or even in complex negotiations between businesses, the smart contract can be tailored to meet the specific needs of all involved parties. This level of customization, combined with the transparency and security provided by blockchain, makes smart contracts a powerful solution for the future of business, where trust and automation merge in a revolutionary way. The operation of smart contracts on Ethereum is fundamentally based on a programming code that defines the conditions and actions to be executed once certain conditions are met. This code is stored on the blockchain, meaning it is immutable and transparent to all participants in the network. Unlike traditional contracts, which can be altered by external interventions such as negotiations or disputes, a smart contract on Ethereum is permanently fixed to the network once it is created, and its execution is guaranteed without the need for intermediaries. A simple example would be a sale contract. Suppose you buy a product from a seller. The smart contract could be programmed in such a way that it only releases payment when the product is delivered, and the seller will only send the product when payment is confirmed. All of this happens automatically, with each part's confirmation being recorded and immutable on the blockchain. This eliminates the need to trust either party to ensure the contract's fulfillment, as the Ethereum network ensures that the contract's conditions are strictly followed. Moreover, the execution of smart contracts on Ethereum happens in a decentralized manner. Instead of relying on a single server or entity to ensure the contract's fulfillment, thousands of nodes in the Ethereum network verify and validate each transaction and contract execution. This not only increases the system's security, but also eliminates the possibility of censorship or centralized failure. Ethereum's decentralization ensures that contracts are executed fairly and without external interference, further strengthening trust in their use for global business and complex transactions. Decentralization is one of the fundamental pillars of Ethereum, and it is what makes smart contracts so powerful. In traditional systems, trust in transactions depends on a central authority, a bank, a lawyer, a notary. But what happens when this authority fails? Ethereum's decentralization solves this problem by distributing the power of verification and execution to a network of independent computers called nodes. These nodes are responsible for verifying each transaction and ensuring that the smart contract's rules are followed without relying on a single entity. This distribution of power makes the system more secure, resilient, and impartial. Ethereum's decentralized model also eliminates one of the biggest problems of traditional systems, the single point of failure. In banks or other centralized intermediaries, if a server crashes or an administrator makes a mistake, it can affect the entire network. In Ethereum, the distributed network of nodes ensures that even if one or several nodes fail, the system continues to function properly. This creates a more robust network, resilient to failures, which is essential for businesses that need security and stability to operate globally. Furthermore, decentralization creates greater transparency, as all transactions and contracts executed on the blockchain are accessible for anyone to verify. This ensures that the parties involved can always confirm what was agreed upon and what is being executed. In a traditional system, records can be manipulated or hidden by intermediaries, but in Ethereum, anyone with access to the network can review the data, without relying on trust in a single centralized entity. This openness offers a new level of trust in the system, which is essential for the large-scale adoption of smart contracts. Smart contracts on Ethereum are not just a theory or a futuristic idea. They are already being applied across various sectors, transforming the way we do business in the real world. In financial transactions, for example, smart contracts can be used to automatically transfer cryptocurrencies or digital assets from one party to another once the predefined conditions are met. Instead of waiting days or even weeks for a transaction to be processed by a traditional bank, the smart contract allows for payment to be made instantly, without the need for any intermediary. This not only accelerates transactions, but also eliminates the high banking and brokerage fees that are often exorbitant. Furthermore, smart contracts have the potential to revolutionize the real estate industry. Instead of going through the traditional process of buying and selling property, which involves a series of steps and intermediaries, such as brokers, lawyers, and banks, it is possible to program a smart contract that only releases the transfer of property ownership after payment is confirmed. The process would be automated with no need for paperwork or manual validation. This would reduce costs and bureaucracy while also increasing the security of all parties involved, as the property registry would be immutable and accessible on the blockchain. Smart contracts are also being used in insurance contracts, where event verification, such as accidents or natural disasters, can be automated. For example, in a travel insurance contract, if a customer's flight is canceled, the smart contract can trigger the payment automatically, without the customer needing to file a claim. This makes the process more efficient and transparent, while ensuring that consumer rights are fulfilled in a fair and timely manner. One of the biggest benefits of smart contracts is the elimination of intermediaries. In traditional systems, trust in transactions often relies on third parties, such as banks, lawyers, notaries, or other institutions. These intermediaries, in addition to making the process slower, add extra costs and the risk of human error. With smart contracts on Ethereum, the automation of transactions eliminates the need for these intermediaries. This not only accelerates the execution of the contract, but also significantly reduces the costs associated with each transaction, making the process much more efficient and accessible, especially for small businesses and individuals. Moreover, smart contracts offer unprecedented security and transparency. As transactions are recorded on the blockchain, they become public and immutable, which prevents any of the parties from altering or manipulating the contract after its execution. This transparency helps build trust between the parties involved, as all actions taken during the contract's execution are visible and auditable in real time. Security is also enhanced, as the blockchain is extremely difficult to hack or defraud, providing a layer of protection that traditional systems cannot guarantee. Another key benefit of smart contracts is speed and error reduction. Instead of relying on manual processes or third parties to verify and validate transactions, smart contracts handle everything automatically. This eliminates the errors that can occur during the manual execution of a contract, such as incorrect calculations, delays in information verification, or communication failures. Furthermore, automation speeds up the process, which can be crucial in situations where speed is essential, such as financial transactions or urgent business processes. Although smart contracts offer an innovative and efficient solution, their large-scale adoption still faces several challenges. One of the biggest obstacles is the resistance of traditional institutions, which have a lot to lose from decentralization. Banks, lawyers, and other authorities that rely on intermediaries to validate and execute contracts see smart contracts as a threat to their business model. Moreover, many of these institutions still lack the technical knowledge necessary to integrate smart contracts into their existing systems, making the transition to a decentralized infrastructure even harder. Another challenge is the complexity and lack of standardization. While Ethereum is a powerful platform, creating and executing smart contracts requires a deep understanding of programming and blockchain technology. This creates an entry barrier for businesses and individuals who want to adopt smart contracts but lack the necessary technical skills. Moreover, the lack of universal standardization for creating smart contracts can hinder interoperability between different platforms and networks, which could limit the scalability of this technology. Moreover, the issue of regulation and the legality of smart contracts also needs to be addressed. In many countries, current legislation does not recognize smart contracts as legally binding or enforceable. This creates a scenario where, although the smart contract functions perfectly within the Ethereum network, it may not carry the same legal weight outside of it. Regulatory authorities will need to work together with developers and businesses to create a legal framework that recognizes and regulates the use of smart contracts in a fair and effective manner. The future of smart contracts on Ethereum and other blockchain platforms is promising, but it is still evolving. As the technology develops and more companies begin adopting this form of negotiation, we can expect a radical shift in the way business is conducted worldwide. What is most likely is that as trust in decentralized platforms grows, blockchain-based solutions will be increasingly used across a variety of sectors, from property management to corporate governance. The greatest advantage of this evolution will be the creation of systems that not only function faster and with fewer costs, but also offer greater security, transparency, and fairness. In addition, the development of new blockchain platforms and improvements to existing ones, like Ethereum 2.0, promise to address many of the obstacles still hindering large-scale adoption, such as scalability and transaction costs. The evolution of these platforms could also allow for greater flexibility and customization in smart contracts, creating even more tailored solutions for different industries and needs. This could open doors for new business models and forms of collaboration, enabling companies of all sizes to benefit from the advantages of smart contracts. What is clear is that smart contracts have the potential to profoundly transform the way we handle contracts and transactions. The future of business will be built on a decentralized infrastructure where negotiations will happen quickly, transparently, and securely. While there are still challenges to overcome, the mass adoption of smart contracts seems to be a matter of when, not if. The future is decentralized, and smart contracts are its key.